This is ShadowQuant Forex Edition, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, May 27, 2026, and this is the After Hours session. Now, let's get into it. Bitcoin just broke below 65,000 for the first time in 2 weeks, hitting a 24-hour low of 64,800. But the broader market is in a risk-off mood, with the dollar-yen near a 5-day high of 159.2, the VIX at 16.59, and the Fear and Greed Index at 14/100, the lowest since early 2025. The Fed is still watching inflation, and the Bank of Japan is staying on the sidelines. What's next for the Forex markets? Let's start with the scorecard. Pulse, your call on euro-dollar was bearish with a target of 1.163. The market closed at 1.1639, flat. Grid, your bearish call on dollar-yen with a target of 158.75. The market was flat. CIPHER, you also called bearish on dollar-yen with a target of 158.5, still flat. SPECTER, your bearish call on dollar-yen with a target of 158, flat. And Apex, your bearish call on dollar-yen with a target of 158, also flat. You all got inconclusive. What's your take on that?
I'll be blunt, I didn't miss anything. The market didn't move. But let's not forget I'm the contrarian. While you all were focused on dollar-yen, I was pointing out the broader macro picture, the flat yield curve, the VIX, and the fact that equities are under pressure. If the market moves, I'll be ready.
I'll be honest, I need to change my approach. I've been too focused on flows and not enough on the macro. The CFTC data is useful, but it's just one piece of the puzzle. I need to integrate it with sentiment and technicals better.
I'll take the feedback. I've been too reliant on sentiment without factoring in the technicals. I need to balance the two more. Let's break down the key macro data. The Fed's cook is still watching inflation, and the 10-year 2-year yield curve is at plus 0.48 pp, the flattest since 2023. The dollar index is at 119.29, and the VIX is at 16.59. The Fear and Greed Index is at 14/100, the lowest since early 2025. What does this mean for Forex? This is a clear risk-off environment. The yield curve flattening is a red flag for a potential recession, and the VIX is still elevated. The dollar is being favored as a safe haven, and the yen is under pressure because of the Bank of Japan's inaction.
And don't forget, the Fed is still hawkish. Even though the CPI is at 3.78%, the market is still pricing in a pause. But that could change if inflation doesn't slow. If the Fed hikes again, the dollar will get even stronger.
On the technical side, dollar-yen is at a 5-day high of 159.2, which is a key resistance level. The 5-day low is 158.75, which is a key support. If it breaks below that, it could signal a deeper correction. But I'm watching the 10-year 2-year spread more closely. The flatness is a warning.
Let's talk about dollar-yen. It's at 159.206, near the 5-day high of 159.38. What's your take?
The technical picture is mixed. The 5-day high of 159.38 is a key resistance level, and I'm watching if it holds. But the 5-day low of 158.75 is a key support. If the pair breaks below that, it could signal a deeper bearish move.
From the flow perspective, leveraged funds are bearish on yen, with a net short of 502 contracts. That's a sign of carry trade unwinding. But the RC is getting a lot of bullish positioning, with 61,178 contracts long. That's a shift in sentiment. The market is favoring higher-yielding currencies, but the yen is under pressure.
I disagree. The yen isn't just under pressure because of the carry trade. It's also because of the Bank of Japan's inaction. The Fed is still hawkish, and the Bank of Japan is not going to do anything. That's a structural issue. I'm not seeing a strong technical case for a bearish move. The resistance at 159.2 is still holding, and the support at 158.75 is still intact.
But the broader macro is still bearish. The yield curve is flat, and the VIX is at 16.59. That's a sign of fear. The dollar is being favored, and the yen is being sold. That's a combination of sentiment and flow. Moving on to euro-dollar. It's at 1.1639, near the 5-day high of 1.1653. What's your take?
I think the euro is overbought. The flat yield curve is a red flag, and the VIX is still high. Euro-dollar is at a resistance level of 1.1639, and if it breaks above that, it could retest 1.165. But I'm watching the 1.162 support. If it breaks below that, the euro could weaken further.
The technical levels are important here. The 1.1639 resistance is a key level to watch. But the 1.162 support is also critical. If the euro breaks below that, it could signal a deeper correction, but I'm not seeing a strong bullish pattern right now.
The sentiment is still bearish. The fear and greed index is at 14/100, and the VIX is at 16.59. That's a sign of caution. The euro is being sold because of the macro risks, and the dollar is being favored as a safe haven.
From the flow perspective, the euro is being sold by leveraged funds, and the dollar is being bought. But I'm also seeing some bullish positioning in the euro. It's a mixed picture, but the macro is still weighing on the euro.
SPECTER, you pushed back on grid read on dollar-yen. Let's dig into that. What's your argument?
I don't agree with grid bearish call. The technical levels are still intact, and the support at 158.75 is holding. The 5-day high of 159.2 is still a key resistance. I'm not seeing a strong case for a breakdown. The broader macro is still bearish, but the technicals suggest the pair is still in a consolidation phase.
But the 10-year, 2-year yield curve is flat and the VIX is at 16.59. That's a sign of fear, not confidence. The yen is under pressure and the dollar is being favored. I think the pair is more likely to break lower than hold above 158.75.
I'll take a middle ground. The technicals suggest consolidation, but the macro is still bearish. The pair is in a range, but the downside is still there. Now the 24-hour calls. Let's hear from each voice. My 24-hour call. Euro-dollar bearish. Target 1.16 by next session.
My 24-hour call, dollar-yen bearish, target 158.75 by next session.
My 24-hour call, RC dollar bearish, target 0.675 by next session.
My 24-hour call, euro-dollar bearish, target 1.16 by next session.
My 24-hour call, dollar-yen bearish, target 158.5 by next session.
So what's the takeaway? The market is in a risk-off mood, with the dollar-yen near a 5-day high, the VIX at 16.59, and the fear and greed index at 14/100. The macro is still bearish, and the technicals are mixed. What to watch tomorrow? The 10-year, 2-year yield curve and the dollar-yen resistance at 159.2. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Forex Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.